G'day, everybody. Thank you for your time. Almost 10 p.m. 1 minute to go. First of all, I'd like to say thank you very much for spending the next hour with me. My goal is to educate as many of you as possible of what the current situation is. The global financial system is hanging by a thread. We will only have a few more of these pop-ins, and then I'll close the class in another minute. So thank you very much for your attendance tonight. If you've ever been to one of my live Zoom classes, you'll know that I talk fast. I am full of energy, so it won't be boring. But if I do say something too fast and you didn't hear it, never fear. This actual class is actually being recorded. I will have probably tomorrow, we'll have a live link for everybody if you want to watch it again. Of course, asking questions is great. Some people like to ask questions in the previous classes by going up to the chat and just writing something. And it doesn't interrupt the class or interrupt me speaking. And when I'm finished speaking, I'll come up and I'll see the chat flash and we'll come up and check your message. Okay, or hold your question till the end and we'll have a good question time at the end. Or if you're not one of them people that like to ask questions, feel free to private question me and message me later. All right, let's get started. So welcome to the gold class, and it's all about the fundamentals of gold. Why gold is really the only currency in the world that has stood the test of time. Global currencies have risen and fallen over the last 6,000 years here on Earth that we can record money. Before that, obviously, was shells and certain other things that people have bartered with, but money and coins have been a serious barter system for over 6,000 years. All right, so tonight you'll get a bit of a history on that. My goal is to make sure that everyone walks away knowing how to protect themselves for not what I think lies ahead, what I think everybody knows now what lies ahead. And after this next 1 hour of presentation, you'll easily see what lies ahead. I try to make it very clear as possible for everyone. So I'll try to talk in layman's terms. I won't talk very technical. Let's close the group now anyway. All right. Where was it in here? Up here. Close the group. Meeting is locked. If for some reason you drop off, please forgive me. Remember, we will be able to get a recording of it up to you. So let's go. Welcome, welcome, welcome. Yeah, seen a few people ask, well, the Australian Authorised Representative number, 3099. That's my number that was given to me back in 2001 by the Australian Securities and Investment Commission, and it entitles me to be able to give advice. I was a full service broker for 17 years. In that time, I was in control of over $25 million. So I've seen a lot of things come and go in my time. I don't know everything, but I know a fair bit of stuff. A lot of stuff that a lot of people won't know. ADA1, it's an authorized derivatives advisor, level 1. Okay, so I can talk about options and different straddles and spreads and how to insure yourself for special announcements. Really good. Anyway, let's get in with it. The key is educate you. And while we educate you, just remember, it's all about education tonight. I'm not giving you specific advice. Okay? Disclaimer, it's there. Make sure you find the right kind of advice. And always make sure whoever you're getting advice from is actually bloody qualified to give that advice. Now, I don't mean qualified in a way that, oh, look at me, I've got numbers next to my name that says that I can be licensed and speak. No, make sure they've got the results. You know, make sure they really do know what they're talking about, because in this day and age, there's a lot of shonkies. I don't know if that's going to keep coming from Infinite Zero. I'll have to deny him if he keeps playing up. All right. So remember, guys, if you want some specific advice, talk to me one-on-one, okay? I can't give anyone specific advice in this kind of environment. Let's get started into the presentation. Gold versus paper. I love it. I love this. It's an expression of all the different people. You know, all the men seem to be worried, but all the women are always laughing. Why is that? You know, all these women Fed chairmen seem to always laugh. They very rarely show emotion. Men, we show emotion through despair and, you know, exhaustion. You know, it's quite interesting. Don't you love the look of Trump's face in the background there? I'll tell you what, Trump hates the US Fed. And you can understand why after we see the next few slides. But look, the names, they've all changed over the last 20 years, but the agenda is still the same. I'm going to see the waiting room now, and I'm going to remove him. Sorry. For some reason, it's playing up. We can't have that interrupting the class. All right, so the face has changed, but their game doesn't, okay? And it is a game. It is a game to them, okay? Their game is to deflate the world currencies, okay? It's been a name. The name of the game has been deflation, deflation, deflation. And the only way to do that is cause inflation. How do they cause inflation? By devaluing the dollar. It helps increase inflation. All right. So that's what the story is. How have they been creating inflation? Well, through the US printing press, you'll see. Now, this is 1960s to early 2015. You can see it's going parabolic. Yeah, really parabolic. The last J curve took off in 2007, 2008 in the last GFC. M1, M2, just the different rates of money supply. And the Euro printing press, no different. Yeah, that's right. Euro's no better than the US dollar, guys. They're both in the same sinking ship. They are both deflating their dollars. Imagine a pie and you divide it into 100 pieces, and then all of a sudden overnight you divide it into 200 pieces. Well, that's what they're doing. Okay, they're constantly dividing our children's future. That's what they're doing. Borrowing money from our children's future to save the current economy. And it's wrong. Euro M1 supply and Euro M2 going parabolic now. Even the Japanese yen, yep, it started a lot earlier, okay, because they had a lot more crisis. 1990, 1991 was their crisis. And ever since then, they've been in 30 years of deflation. And the only way out of deflation is to try and inflate your way out of it again. And that's what they've been doing, pumping billions and billions and trillions of yen into their country economy. Now, you've got to understand what M1 and M2 is. If you don't know what M1 and M2 is, well, let's quickly read this so you can understand. For those of you that already know what M1 and M2 is, congratulations, well done. Just resharpen the axe. M1 only measures the most liquid forms of money. It's limited to the currency that's actually in the hands of the public. Yes, it includes all your traveller's checks and demand deposits, any checking account you can write your check from. Okay. M2 gets a little bit more creative. It has all of M1 plus all the savings accounts, like, you know, your term deposit, time deposits, like, you know, I can lock it away for 12 months and get that extra 0.5% interest rate. So all that kind of money is kind of still liquid, but it's not semi-liquid, so it goes into M2. And remember, very important part, deposits under 100,000. Yep, that's right, under 100,000. All right, so what does M3 measure? M3 is a big one. That's where the big boys play. All right, that's where you see large denominations of over 100,000 of everything. Okay, it even shares with you in M3. You can clearly see, if you look into it really in fine detail, the amount of money that's in, you know, a European bank, like how many US dollars European banks hold, how many US dollars do any Australian banks hold, and vice versa. How many Euro dollars does any US bank hold? Okay, they will counter that. They'll count that each year. Okay, and that comes up in your M3. So in other words, the M3 tracks what the big boys are doing. Okay, with all the money, it's the footprint. Okay, it's the checkbook for the big boys playground. M3. All right, we want to know what M3 is. So here's the M3 supply for the euro, and here's the M3 money supply for Japan. Okay, it's exponentially. The numbers are a lot bigger than M1 and M2. Exponentially a lot bigger. But where's USA? Very, very important. Where's USA? Well, there's a Euro M3 updated. Look at that, now 2020. Look at it, just went parabolic in the last 4 months. Look at that, parabolic Japanese yen in the last 3 or 4 months. But we still can't get a hold of M3 money supply from the US. In 2006, the US mysteriously stopped sharing its M3 data for free. Why? I wonder why, hey? We know what happened, don't we? Within 12 months later, Lehman Brothers failure and QE1. Ben Bernanke, at the strike of a pen, increased the world's supply of US dollars from almost 1 trillion to 2 trillion overnight. And that still wasn't enough. So another few months later, he went QE2, and another 2 years later, it was a joint global effort in 2012 to stop Greece and the euro from collapsing. So they introduced QE3. Now this shows up basically where the money supplies of, and it's gone parabolic again from there. It started to roll over a little bit in 2016. Janet Yellen promised that she would cut back the central bank's balance sheets, and she did. And then for a year and a half, Mr. Jerome Powell took over last year and the year before. He was doing a great result. But then September last year, something interesting happened. Okay, and you'll see it in the charts that I share. All right, M2 money supply. We can only get M2 at the moment. Okay, so you can see that we've just gone parabolic in 2020. Okay, it's just gone absolutely crazy again. Okay, pretty much like it was doing in 2007, 2008, 2009 through to 2012. And it was a 3 to 4 year money printing crisis to get us out of the shit. Now, remember, COVID-19 is just something that's in amongst what was going to happen anyway. My charts and data that I collected from the last few years that I've shared with you, and I'll share with you in this presentation tonight, you will see that this crisis was coming regardless of COVID-19. All it did was push it to happen before Trump's election. Okay? There's a lot of, mystery, a lot of political, shit slinging. I won't even get into that tonight. But just remember, there's still no M3. When will the US start showing M3? They can't. They're a global reserve currency, and they don't want to share M3, what the world's banks are doing with the, dollars. All right. There's an old conspiracy theory behind it saying, that China was buying US dollars and China was buying US bonds so that they could keep a currency peg against the US dollar, the Chinese yuan. But that is now being released, and the Chinese yuan has been strengthening a lot over the last 6 to 12 months. Guarantee you this, if the Chinese yuan starts rising, we will have inflation worldwide. We could possibly see a hyperinflation cycle. So we've got to be careful what we wish for. All right. Why am I sharing with you so much information about the money printing supply? Well, just visualize this. You're out on a boat and you've got your 3 best mates in the boat, and it's the last day of fishing, and your mate pulls out an orange, and oh man, can I have that orange? No man, I'll give you $20 for it. Whatever money is in that boat is what that orange can be worth. But the more money that's in that boat, the more that orange is worth. Forget about it being in a nice cruisy weekend away fishing trip. What if it was you're on the Titanic and it was the last orange, and you're in a life and death situation? Remove that orange, and I'm talking about gold. So gold is your best catastrophe, major economic crisis insurance. So you can understand why people jump into gold and want to spend as much as they can to insure themselves. Okay, it's like that last piece of orange, last piece of food for survival. It's a game of survival for them. Okay, and you've got to understand how the gold works on the balance books of all of the central banks and also all of your private banks. So the money supply controls everything. The more money supply out there, the more we can then borrow money and buy houses. The more money is being created, the more wages can be created, therefore house prices can rise. And no difference with the Dow. So isn't it interesting that from 1920, all of our data, the M2 money supply and the Dow Jones have been going up perfectly in a parabolic J curve together at the same rate. Sometimes a little bit below, sometimes a little bit above. But the Dow Jones just follows the M2 money supply. Really interesting data is, you think you're feeling warm and fuzzy because, your Google shares have gone up. But with inflation, of course, you've done a lot more better than most, Google and Amazon. They call them the FANG stocks. They're all going crazy at the moment. NASDAQ's at record high. I just can't see that party lasting, guys. Look back over the last 3 months, the data says straight away. You've had Apple closing stores, you've had people laying off in Apple, you've had all them looting stores. They're going to hurt profits, guys. I know that, people are in denial and they want to see a global economy back to normal. It's not going to return back to normal for at least another 12 months, 18 months. We've got a vaccine coming. 20, 30, 40% of the race may have that vaccine. Another 20, 30, 40% won't have it. So there'd be, major debates going on for another 12 months before they force the majority to have it. We'll get herd immunity by this time next year, hopefully, and we'll have probably a third wave, and that will be it. History repeats. I shared a chart on my personal wall back in May, and it was just the 1918 Spanish flu epidemic, how it went through the global economy in 3 waves. And people laughed at me thinking, oh, that's different. We've got more of this now, we've got more hygiene here this time. But this is a different virus. It still comes and goes. Everyone gets displacement, and people go back to normal, and then the virus returns. So it takes about 3 waves for the herd to get immune. When that happens, the economy will bounce back. Meanwhile, the printing press is going parabolic. So get ready. The Dow is going to well and truly have a crash. But when it does, I don't think it's going to keep falling to 15,000, 10,000. If the M2 money supply is going up to, justify Dow being at 40,000, the Dow is going to follow that money supply. Money has to go somewhere, and it goes into these markets. Same with gold. You can look at the bottom one here. Gold's always followed the M2 and M3. Big jump here in 1933. We'll talk about that later. But it sat there for $20 to $40 and sat there at $40, back up to 45, back down to 40. And then in 1970, we just took off straight up to the $800 mark. Okay, back down, went to sleep, back to 250, and we took off up to nearly 2,000. We nearly caught up to the M2 money supply again. You can see it. We caught up to where the M2 should have been before Ben Bernanke increased the US dollar reserves. So don't expect gold to go to $10,000, $20,000 and try and catch up to the $6 trillion that's just been created out of thin air in the last 3 months. It ain't going to happen, but it will try to catch up to where the money supply was pre-January COVID-19 crisis. Okay, it's just a way that it likes to catch up to inflation. Gold is the best inflation hedge that you can have. It's also the best deflation hedge. Central banks are the biggest risk to global markets right now. Now, this is an old slide from 2017 and 18. $11.5 trillion printed since 2006. That's combined between the ECB, US Fed, Bank of Japan, Bank of England, and Swiss. Okay, so that's just off their balance sheets. 1.5 trillion was just done in 2017. So it never stopped. Okay, the world's economies were only going on all this borrowed money, or not so much borrowed money, but printed money. Money out of thin air. We're borrowing money and paying today's time with our children's future money, and it's scaring me. All right, look what they've just done. This is the U.S. central bank's balance sheets. Okay, we're just, as I said, Janet Yellen did a good job. In 2016-17, she plateaued it off and didn't increase any money. As she left, she did decrease the value, I think from 43 billion down to 38 billion a month. So they're currently expanding the economy by 38 to 40 billion a month, increasing. That means what? The central bank is borrowing money off our children's future to pay current 10-year bonds and current, bonds for the government, because no one wants to touch the US government. They know that they're in debt. Something like $20 trillion, $30 trillion. It's unpayable. It's nearly 100% GDP. It's a recipe for disaster. Yep. If you were a bank manager, you would not lend money to America if they were an individual. And yet here we are. The central banks have just gone crazy. Now, there was a little bit of a blip here. If you can see my cursor, September. Yeah, that's right, September 2019, before our January COVID-19 crisis. And then we went to sleep December and January. only went sideways here because that's when the US Fed shut down for Christmas and their summer holiday. But instantly in February and March, April, May, they've been pumping the credit again. If you look at the figures and you know your facts, there was $3 trillion created back in May, and there was another $1 trillion instantly passed through Congress last week. So that's $4 trillion just in the last couple of months. Okay, that's $7 trillion added now to the central bank's balance sheets. All that hard work that Janet Yellen did and the first couple of years of power, all undone now. Back to the printing press. So you can see why there's a recipe for disaster. Hyperinflation could come, maybe deflation will come. We just don't know how this is going to work. A lot of people feared there'd be massive inflation in 2012, 2013, 2014, 2015, but it didn't happen for some reason. All that funny money never entered into the public's hand. It stayed trapped in the bank balance sheets and individual asset prices. Will this happen again? I don't know. But if it does find its way, meaning if inflation finds its way into the streets, that's when we'll have hyperinflation. All right, the rise and fall of the dollar, nice little chart from the early 1900s to 2020. Your US dollar, what it could have bought around the world, what it was worth, and as each, haircut that it's had, each central bank has come in and just divided the pie of the US dollar. And it's now currently worth not even toilet paper. I think in this COVID-19 crisis, toilet paper is worth more than your US dollars. And look, as I said, I'm not going to get into a debate about, Trump. He's got some good policies. He's got some shocking policies. And boy, oh boy, someone needs to teach him how to speak sometimes. There's no holding back. We can look at all the flaws in every single president. Each one's done a little tiny good and they've done a little bit of bad, but it doesn't matter. The debt is a problem. Okay, debt has expanded and it's hyper inflating. The debt is unpayable now. At the same time, you've got the USA debt being unpayable. You've got simple things like Chinese GDP. No one's going to make America great again until we stop China robbing the world's GDP. China is robbing the world of natural ability to manufacture and be self-sufficient. As I said before, if the Chinese increase their yarn by 10%, we'll have probably 20% inflation. That's how much of an effect the Chinese have got on every single product around the world right now. It's amazing. So you can understand one good policy that Trump's got is trying to bring manufacturing back to America. And I think here in Australia, we need a Prime Minister to stand up too and bring back manufacturing to Australia as well. But it's not going to happen, unfortunately, not in my lifetime. The tide has definitely turned. This was an old slide from 2018 when the United States owned 24.32% of the world in its GDP. Okay, China was only 14.8. But as you can see from that last one, as you can see from this next one, China's overtaken them now. Okay. Very, very interesting times. We will definitely see China have some sort of say in the global economy, regardless of what US try to do with China. China has got a big influence now, and they're not unstoppable, but we've got to manage them. And how we do that, I don't know. Just remember this, the US dollar is no longer as powerful as it used to be. It is time for a new world currency. And when I say that, it is time, literally. Let's take a look at it. The time period of all the global currencies since Julius Caesar. All right, you can see how gold has played the role. Then we went into the 1500s, 1600s, and 1700s, and 1800s, and early 1900s, and it was the silver. Okay, Netherlands silver, the Spanish silver. Okay, all silver came into power. It was massive for 500-600 years. Silver was stronger than gold. Silver was worth more than gold too. Okay. Until the Mexican silver mines and the Spanish grabbing all the silver. And then the rise of the British Empire. Yeah. 1830s, 1840s, 1850s, 1920, 1930. British Empire. It was pretty huge. if you are in a Commonwealth country, you'll know all about the gold sovereigns, and we'll talk about them later. But 1933, the Bretton Woods kicked in, and around about 100 years, we should have the US dollar. So we've got probably till 2033 until we see some type of disconnection of the US dollar. Is it happening already? Absolutely. You know, things don't just happen overnight. They happen over 10, 20, 30 years. And there's actually a really good chart that I've seen on one documentary I watched back a few years ago. It's the death of 50 years and the birth of 50 years of the new currency that will take over. There's an overlap, a transition period, handing of the guard, 50 years. So, you know, shit's already happened since the year 2000 for America. You know, we've only got about 33 years left we've got 2033, so 13 years left, I believe, on the timeline for the US dollar to remain the new or the current global currency. Okay, it will not be the reserve currency after 2033. Maybe it'll happen before. Maybe all this COVID and what China's got planned will kill the US dollar quicker. Who knows? People are going to say that Trump, you know, he's a bankruptcy president. He's going to bankrupt America. We don't know. Okay, you can assume so much, but I'm using history as a guide. 100 to 200 years, 100 to 200 years, and in the last 4 cycles, 100 years, 100 years, 100 years, 100 years. No global currency has lasted more than 100 years. Something to think about, guys. So where is gold heading? What is possible? Well, here's our current gold price. If you love these colorful gold charts, you can go there and check it out, www.goldchartsrus.com. And you go there and check out the wallpapers and add it to any of your charts. Very nice charts. You can change the background to gold bullion or gold and dollars. I just like it because we know that it's the death of the dollar and the more printing of the dollars that's causing gold to go through the roof. CPI adjusted price for gold. Just remember, 2,622. That's basically what the price of gold would have to go to right now to catch up to where it went in 1980, based on what dollars were worth back in 1980. You know, then you got the old CPI method, and if you use the old CPI method, which doesn't check out cost of things like registration going up, cost of what oil, how it has, you know, spasmodical movements. Inflation is now being trimmed to keep under control. And if you've got 1 or 2, let's just say there's a big cyclone up in North Queensland here in Australia, cost of our bananas go from $1.99 a kilo to $12 a kilo. But instantly that month, they will get rid of bananas out of the cost of inflation. So that one-off event will not have any impact on the global, on our Australian inflation rate. But the old formula would allow for real physical inflation. So you'd get, you know, the 25% increase in healthcare, you know, the 12% increase each year in dairy. And, you know, all of them things are being removed from the basket of currencies that they use to create the inflation numbers. They're fudging the books to make sure that you know that there's no such thing as inflation. But tell that to, you know, your food bill and your car, you know, expenses to keep your car running. You know, everything's running through the roof. So when you look at that, they reckon, you know, crazy, outstanding, $8,000, $9,000 gold would need to spike to. I don't think it's going to get that high, but you can see easy. It's got a good chance to get to 3,500, 4,000. And there's a lot of evidence that, you know, fair value for gold would be around 3,500, 4,000. I'll show you more and more data that will show you where we're heading to. All right, there is a cycle to gold. It's a seasonal cycle. Some say it's because of the Indian wedding season. Some say it's because of what the Western Hemisphere and the Southern Hemisphere, Eastern hemispheres. Basically this, South Africa and Australia are what? The world's biggest gold miners. Yeah, we produce the most amount of gold. So when do we have our monsoons? Okay, we have our monsoons at certain periods of time, and it shuts the mines down, mine supply. So the speed of the mine and mine supply, the way the miners operate the extra stockpiles of gold, the London Metal Exchange, how they exchange the gold and how they release the gold that they've got in stockpiles to the market will always create these seasonal performances. We just don't need to really know how they work. It's a bit like when you swallow something in your mouth, you hope that it comes out your bum the next day. You know, we don't need to be doctors and understand exactly how it works. We've got to have faith that it works. And it's the same thing with the gold seasonal charts. Now you can see that there's a dotted line on the chart. That's the average over the last 15 years. And the black line is the average over the last 40 years. You can see that the season's getting later for the drop and the season's getting a little bit later for the rise. So it's just getting a little bit later and later each year. And now all of a sudden we've jumped early. Okay. We really haven't had the downturn in March, April, May, June, July, like we should seasonally. So could it be that, you know, we've got the end of July will be the top of the market now. So this is known as 100% opposite correlation seasonal performance. And it does happen many times. You can go back through your data, and there's a good website called kitco.com, and you can go there and look at every month for the last 20 years, and you can go do your bit of a analysis and work out that every 3 years out of 10, you'll have an opposite correlation where the top is in July. Interesting. All right, there's other cycles as well. I'm not going to get into all the cycle work, but there are so many of them. There's a 60-year cycle, a 40-year cycle. There's a 15-year boom and a 15-year bust for the commodity cycle. And then you've got the simple stocks are high, real estate's high, precious metals are low. Precious metals are high, stocks are low, and real estate's low. And it's just a way that people move their money from the share market into gold for protection, and then they get out of the gold and sell and buy the shares. It's just a simple process, okay? Money, there's not enough money in the world for everything to go up all at once, okay? So we all have turns at rallying, having a crash, big boom crash, and then gold is there to protect you when the stocks crash and real estate crash. Dow Jones versus gold, nice little parabolic J curve happening. Each wave now that we have, and the highs of the Dow get higher and higher, and then the bigger crashes go, the higher the gold price goes. That's all it is. We should have a gold to Dow ratio somewhere around 5 to 1. Yep, that means if the Dow's at 30,000, then how many 5 ounces of gold would be? Yeah, 3,000. All right, 3,000 times 5 is 15,000. I think the Dow could come down to 15,000 again. Gold will get to 3,000. You know, don't think the Dow would plunge dramatically. And, you know, if the Dow does stay to 30,000, well then, shit, that's $6,000 gold on a 5 to 1 ratio. You just seem to be talking a little bit too, you know, airy-fairy. I don't like to pump up gold. I'm not a gold bullion dealer. I have no vested interest whatsoever to try and sell gold to anyone. My vested interest here is to make sure that you understand gold is an insurance policy. Okay, just like any insurance policy, you've got to buy it before a crash. You don't buy it after the crash like all the masses are doing right now. It's going to end badly because you're going to cash in your gold and then you go, oh, and the insurance company go, sorry, when did you buy this gold? Yeah, well, sorry. It's just exactly like car insurance. You've got to have the car insurance before you have the car crash. You can't buy the car insurance tomorrow after you've had the car crash. Think about it like that. And you don't want to be paying too much for your insurance. If you've got a $5,000 average car, then you only want to pay $500 for insurance. But if you've got an 80 grand, 100 grand, $150,000, you know, luxury car, you may need to insure that car for $2 grand, you know, pay $2 grand a year, $2.5 grand. As you have more of a portfolio to protect, the more gold you should hold. As you have only a limited amount of portfolio, you should only hold around 10%. There's a reason why 10% is a magical number, because as you see 50% of your portfolio take a 50% haircut, that 10% in gold doubles and then doubles again. So that 10% turns into 50% and replaces that money that you lost. So you become what they call neutral hedged. You don't lose any money. Very handy thing that I've set up with all of my clients that have gone into retirement or in the 5 to 7 years transition period before they get into retirement is to get into what they call neutral hedged. You don't want to be in negative geared structure. You don't want to be in positive geared structure just yet. If you've got some, great, but yeah, neutral geared is where you need to be. And just always remember, you don't want to be losing money when it comes down to needing that money. So be careful. Every 35-year cycle, gold and the stock market cycle. It's pretty good, works pretty good. So how do you invest in gold and silver? Really important, and silver, it's very important. Remember this, gold will protect you during inflation and deflation. Silver will only protect you during inflation. Silver won't protect you in deflationary times. Why? Because silver is also an industrial metal. Remember that, silver is still a byproduct, an industrial metal. So you're going to see silver stockpiles build as base metals dig. They'll find more silver. Gold mines, gold in particular, is definitely the only precious metal that will protect you during inflation and deflation. Silver only during inflation. It doesn't protect during deflation. Remember, I was a licensed stockbroker, and I will tell you, many, many years ago, I loved it. I was pumping up the gold miners. Yeah, buy some gold and buy some gold miners. Why? Because I got commissions from it. It was healthy. It was brilliant. I made a lot of money from commissions, getting people to buy gold stocks. But here's something they don't tell you. In 2008, when the big GFC hit, it crashed downwards big time. Same thing again in 2020. All the share market, the Dow fell from 30,000 straight down to 17,000. You know, the ASX fell from 7,000 almost right down to bloody, 5. Massive big haircuts. And do you think the gold miners were escaped from the big sell-off? No. They got sold off too, guys. So just remember, you want to make sure that you do protect yourself by physical gold. Don't just think you're getting gold insurance by buying a gold mine. Sure, you might get lucky. Some of these small little penny stocks that were 16 cents have now risen to $5, and you've made a brilliant 3,000% return. Some of the old just getting started miners, at $7 have now gone on to be, big multinational miners, and they're $85 now. You've made $1,000 return. But in general, most of it's just going to be, a 13, 20, 15% average kind of share market performance. Okay. If the Dow climbs 10, 12% each year, then so will the gold mining stocks. They just go to sleep for so many years. So beware. Don't listen to your broker. They'll send your broker. Gold mining stocks will fall just as quick as other stocks in the market. All right. So how do we buy gold? The Golden Buddha of Thailand. I'm sure some of you have been there. I love it. I went there in 1992, and it was still the biggest chunk of gold that I've ever seen in my life. 2.5 tons of pure gold. And that's roughly $200 million Australian of gold and rising. So if you haven't got a spare $200 million laying around, well, you have to find another way of buying a gold, yeah? Everyone buys gold this way. I'm sure you've heard. You can buy gold nuggets. You buy your gold bullion. But it's not the best way. Why is it not the best way? This is the part of educating you. Understanding, using history as a guide. What is the best way to buy gold and silver, and why? Most of all, why? If I'm going to give you a suggestion, I'm going to back it up with some good facts. Very simple facts that you don't have to be a rocket scientist to understand. But back in 1933, you remember that chart where gold went from $20 to $40 overnight? Well, this is the reason why. The US President, Roosevelt at the time, said, "Give me all your gold. I'm confiscating all the gold and gold coins, gold bullion, gold certificates. I want you to hand them into the Federal Reserve." But in it was a nice little exemption clause. So if you had a bit of gold that you needed for your own business, that's fine, like profession or artwork. Or if you're in gold refining and you're a bit of a gold miner, you obviously got to keep trading. But then there was a point B: gold coins and gold certificates in the amount not exceeding aggregate of $100. So if you had, the gold coin that you've kept from your great grandmother to your grandmother, and your grandmother passed it on to you, that was safe. It's just talking about 1 gold or 2 gold heirlooms. There was nothing to worry about. But if you had a large portfolio and you held it in gold incorrectly, you would have to hand that over at the wrong possible time ever. All right, but down here at the end of B was the get out of jail free card. Gold coins having a recognized special value to the collector, as they were rare and unusual coins. So they did not want to touch the numismatic coins, the rare coins. Okay, really important. Only rare gold coins were exempt from the Confiscation Act. So just remember, 1933 it happened. We know what happened then. You know, the big run of the banks. It was the collapse of the, British Empire. US dollar came to birth as a new global currency. A new global currency will come. There will be talk about a gold, some type of gold play again. We'll talk more about that later. But remember, gold coins were exempt. We had a gold confiscation in the past. It doesn't guarantee that it's going to happen in the future. But remember this, history doesn't exactly rhyme, but it sure as history doesn't exactly repeat, but it sure as heck rhymes. It's one of my favorite sayings. History never exactly repeats, but it sure as heck rhymes. So there's going to be something like this again in the future, something where they will take our gold at the wrong possible time. So what about rare gold and coins as an income stream or insurance? You've got to have some type of insurance. We insure ourselves for health. We insure ourselves and our cars. We insure our own income that we earn from work. We insure our pets. We insure our houses, our cars. Why don't we insure our financial portfolio, our assets, what our true wealth is, our retirement fund? It's got to be insured. You've got to be able to protect it. Secret currency. I call this investment the secret currency because it's beyond the reach of any government or corporation. In fact, who owns the governments? Yeah, the wealthiest individuals around the world. So many of the wealthiest families that have used this secret currency for generations to grow and protect their fortunes. Okay, they control the government. So there's no way that they'll ever allow any government puppet to pass through Congress any legislation that would change them laws where extremely rare coins, certain coins will be exempt. People love gold, but the masses only buy gold because they've been told from the hairdresser or their taxi driver, yep, gold's a great investment. Now's the time to buy it. Same thing happened in 2017 and 18 with Bitcoin. You're always going to get bubbles. So when your taxi driver or your hairdresser tells you about how great an investment is, it's a good time to sell. So let me share with you one example about the secret currency. All right. Some of you may know Mayer Amschel Rothschild. We know the Rothschilds family. Everyone knows about them now. But okay, the investment of the secret currency helped him set up to be the largest family fortune the world has ever seen. A bit of story about him. You know that Mayer was German, and he, in the middle of the 18th century, is raised in the very slums of the Frankfurt ghettos, where the average house held 15 people. When the boy was 11, a smallpox epidemic swept through the ghetto and killed both his parents. That tragedy then went sent on to set Mayer up to learn the greatest secret of his life. Somehow, I don't know who it was that did it, but he was somehow sent to get a banking apprenticeship in Hanover. There he entered the homes of Germany's wealthy and powerful men, the princes, the grand dukes, all the archbishops, the Vatican Church. Yep, they obviously own a lot of gold. And he listened carefully and learned about the secret golden currency of the rich. When Rothschilds grew up and returned back to Frankfurt, the area's wealthiest families hired him for his rare financial expertise. Now, could you imagine knowing how gold rallies up when all the rest of the assets around the world fall? Now, imagine how quickly you could compound your money, knowing that you never had big losses, having 2 to 3 bad losses every 10 years, having 2 to 3 losses, 2 to 3 years losses every 10 years. That's a typical cycle. 10 to 12 year cycle, 10 years good, 3 years bad, call it a 14-year cycle. Some people say it's a 7-year cycle. They will vary. You'll have short cycles of bust booms, but on average is a 12-year cycle. So in return, Rothschild helped the wealthy grow their fortunes, and thanks to his knowledge, he became the most powerful man in the city. Rothschild married and had 10 children, 5 sons and 5 daughters. In time, the sons went on to Europe's major financial centers, London, Paris, Vienna, and Frankfurt, and they opened up banking businesses similar to their fathers. Their network and knowledge of the secret currency certainly helped. In a matter of years, the Rothschilds became the wealthiest family in the world, and they still are today, whether you like it or not. You're never going to get them and their net value placed in Barron's Top 100 or Times Magazine. They would sue them. The people that are higher net wealth don't want to be known. Okay, the people that claim to be the richest person in the world have got a vested interest to be claimed to be the richest in the world. If you're very rich, or you see most people that are maybe not the richest people in the world, but very comfortable rich, they hide their rich. They don't walk around with gold chains like Kanye West on, or Kanye, what's his name, all the different people. Look at all these show ponies that like showing off their fast cars and their big bundles of cash. But the true wealthy people are, them wealthy farmers, that still wear a good pair of denim jeans and a nice shirt. They don't overdress. They'll never dress like a bum, but you would never know that they are multi-millionaires if you walk past them in the street. That's true wealth, guys. So buying rare coins is an art, and you need to know the secrets. I've just shared with you a few secrets, okay? You're going to make sure that you buy the correct type of gold. You just don't want to go out and buy gold bullion, okay, or gold nuggets. It's not going to protect you. So what are the secrets? If you're Aussie or if you're in any Commonwealth country, you can get these coins. You can get all of the British monarch coins still, okay? Just remember, pre-1930s, okay? They all start from 1850 gold rush years right through to 1930s. There's nearly 90 years of coins to collect. Try to stay away from the exotic years where they want to pay $10,000 for one coin. All right, it's obvious because there's only 200 coins in existence. All right, but you can get into the years where they made 30,000 or a couple of million, and you can find them very close to the gold bullion content value. Okay, so you're getting them as close as you can to the gold bullion value. And what happens is an interesting thing, and I can prove it to you. If you want some information on it, I'll give you more. There is an art to these coins, because when the gold value drops, what do you think is going to happen to that beautiful gold bullion you've got? It's going to drop in value and follow the exact same price as gold spot price. But these gold coins, the intrinsic value of the coin kicks in when gold falls, and the rarity of the coin holds the price up. So it's kind of like an insurance policy on your insurance policy. So it's insurance on your gold, having the rarity of the coin. So it's not just like a dirty old bullion or a dirty old nugget. It'll just follow the price of gold up and down. So these coins will protect you even if the gold price falls. That's how brilliant this rare secret currency is. So will we ever return back to a gold standard? We've got about 15 minutes to go. Gold standard, it's going to be pretty hard. Okay, there is a talk of a world gold standard. There's been talk of gold standards many years. Ever since 1971, we've come off the gold standard because we've been printing presses running hot. The plans for the New World Order, the New World Currency, there's nothing we can do about it. We're moving that way. We're moving into a cashless society. In 2009, after the first GFC of 2008, it was already happening. Governments have been talking about it for many years. Heck, even the Bible talks about it thousands of years ago, about a new united world currency and one world order. This is the first time, though, that anyone has made such official coins, and it was Russian design, made in a German mint, and they gave every prime minister in the May 2009 G8 meeting, okay, a special sample coin, okay, that the Russian president handed out. And they knew that we wanted an alternate to the US dollar, and it wasn't going to be introduced that next 2 years. No way. It's real, folks. It's coming soon. You can do some more research on it. Ask me for some research. I'm always happy to share more info with you. But there's a picture of it. We're looking at it. Little tiny gold coin, and everyone was given one. Nice, pretty little coin. Then you got to ask yourself, were they talking about crypto? Because instantly, straight after that G8 summit, or the birth of Bitcoin was made. Okay, very interesting. 3rd of January 2009, the Bitcoin network came into existence with Satoshi Nakamoto mining the Genesis block of Bitcoin, block number 0, which had a reward of 50 Bitcoins. Embedded inside of that Coinbase of this block was the text, 3rd of January 2009, Chancellor on the brink of second bailout for banks. Now remember, November 2008, we seen a global crisis where QE1, we just seen $1 trillion US dollars turned into $2 trillion at the stroke of a pen. What do you think that did to the value of the US dollar? Now, this has always been an alternative to the US dollar. It's always been created as an alternative to gold as well. All right. Now, coincidence? I don't think so. Fed Chairman Bernanke, he introduced the first round of QE. Later, we now call it QE1 in November 2008. And that's what they did. The Fed proposed to buy 100 billion in the agency's debts to help up the banks. And then they also gave out 500 billion in mortgage-backed securities, okay, through the way they did their bond buying program. They even bought Ford motor vehicle bonds as well. The first round was further extended in March 2009. Remember, in the Bitcoin code, it said in January that second round was coming. And within a month or two, March 2009, Bernanke increased another 850 billion. So almost another $1 trillion. So the world's money supply went from 1 trillion US to 2 trillion US, then to 3 trillion US. The flight of money was entering into Bitcoin from 2009 onwards as we devalued the US dollar even further. Crypto is here to stay, whether you like it or not. I'm not a big believer in crypto and all of the coins, but I am a big believer in the blockchain technology and how blockchain will be some shape and form of the new global banking system. Now, I'll give you a little bit of a short story on what I learned in the early 2000s through to the end of 2000s. Early 2001, 2002, seeing copper go through the roof. So we're chasing copper stock. And then 2003, 2004 came, it was nickel going through the roof. Then 2005, 2006, it was silver. Then 2007, 2008, it was zinc. And here we are each year trying to catch, the copper train, then the zinc train, then the nickel train, then the silver train. When all I had to do was buy Caterpillar mining equipment shares. So think about that for a minute. What lesson I'm teaching you there. Don't try to chase the ball and chase the individual ball. Go and buy the ball maker, So go buy the mining company. The mining company was Caterpillar. It didn't matter whether you're a silver company or a zinc company or a nickel or a rare earth company, lithium company. In the early 2012s, lithium went through the roof as China cornered the rare earths market. It's huge. Rare earths and metals and minerals, they're always going to form some type of demand and create a bubble each year or two. So don't try to invest into one individual mining company. Invest into something that's going to benefit from any mining boom. And that's what I learned. So what can I take on board here and my experience teach me in cryptocurrency? There's over 2,000 coins now. There's at least 200 really big ones now that are getting a lot of liquidity every day. Don't try to invest in all of them. Try to invest in the blockchain technology. So what are the apps on your phone? There's a lot of new apps coming out on the phone that are already established for doing all your paywave transactions on your phone. They will definitely be able to have the technology to transfer crypto and paywave crypto over as well. So look to where the main blockchain is. December this year, the Australian share market will introduce for the first time all transactions of all shares will be settled via blockchain technology. Get ready. It currently takes 3 days for me to sell my shares and get that access to that money. But from December, it'll be cleared by the end of that day. Really perfect. And also something else to remember, stockbrokers and all financial planners, up until 2018, learning about crypto was only, it was non-compulsory. You know, each year you've got to keep sharpening your axe and learning and keep learning and keep learning. Otherwise, you don't keep your license. But now they've made it compulsory. Crypto is now a compulsory subject in your end of year and each year license. You've got to get what they call ATP points, TP points. You've got to get these certain amount of points each year to maintain your license. And the more you study, the more points you get. And that's all it is. So now they make it compulsory. There's over 7 banks globally now that are actually making all their advisors compulsory learn crypto. Well, I'm not going to tell you Bitcoin, Ethereum, or Ripple, or, you know, all the other ones like Monero. There's so many out there, guys. Just remember the blockchain technology. Gold-backed crypto. Imagine that. I mean, you can type in gold-backed crypto and that's what you get. You know, Iranians have tried to do it. Yep, the Swiss have tried to do it. And you look down here at the bottom, the Perth Mint. Now, the Perth Mint's probably got one of the biggest gold supplies in the world. If they ever try to produce a gold-backed crypto, it's probably the only big bank in the world that could probably do it. Okay, so you got to have a lot of gold even to issue a cryptocurrency. So you can get on and do a bit more research about it. Will there ever be just a pure gold crypto coin? I don't think so. I think the future of the next gold currency will be a basket of currencies, and we'll have like a point system. So let's just say you're an oil company, an oil country, and you produce oil. Well, oil will still be a part of the reserve currency. You know, as long as you've got oil, you can issue a certain amount of currency because that currency is got a value which is attached to your oil. And if we're like Australia, we produce a lot of gold, then therefore we'll have a gold-backed currency. But if you are a silver country where you have a lot of silver but no gold, then you'll have silver based on your currency. Some type of rare earth material will be used for you to be able to print money. We have to stop this vigilantes from just printing as many paper dollars as they want. Okay? There's no answer. I don't think the answer is robbing our children's future. We've got to stop it. Let's go look back now at the predictions of gold. In 2010, I gave all of my clients and people that were subscribed to my weekly newsletters a chart. Gold, it was at $800 and $1,000, went up to $1,200, come back down to $950, and then took off and went to $2,000. My prediction was $2,000 an ounce in the next 2 to 3 years. Quick way to make 100% return. And lo and behold, that's the chart later on. Years later, 100% return. I had 3 parabolic J-curve moving averages. The fastest moving average, the medium moving average, and the slowest and the longer term running moving average. And the way that the gold bull rallied in 2010 through to 2012, it took the fastest moving average route to the top. Now, yes, it only got to 1,922. Shoot me, it didn't get to 2,000. Missed it out by $80. But you can see when it clearly broke the trend and it was time to get out. You would have made some good money listening to my advice. What you got to understand is there's 3 stages to the bull market. The stealth phase, they call it the disbelief stage. No one thinks it's in an uptrend. Then there's the awareness stage where people start seeing that it's in an uptrend. It's getting a little bit of attention. And then there's a big sell-off. It's the first big sell-off, a really, really big sell-off that people think that's the end of the bull. And it's called the bear trap. Then we kick back in. It catches up to the average again where it should have been over the long term when you look back on a long-term trend line. And then the media attention, the enthusiasm. Then the public get a hold of it. It gets greedy. Then everyone's delusional. They'll think it keeps going. It's going to the moon. Yeah, well, and then it crashes. Okay, then it goes what they call the bounce is called the bull trap. It has a bit of a rally. Everyone thinks it's returning back to normal and still in an uptrend, but then it just crashes. The fear, everyone starts selling it, and it just drops. Okay, it keeps dropping. And it can take many, many decades for a new bull market to reappear. It all depends on its own cycle. Gold and silver cycle is roughly a 30-year cycle, and we have reached a point in our cycle where we should be going parabolic. Okay, and you'll see that 3 stages again forming in our gold price. So just remember, in 1920 to 2010, M1 and M2, there's that little time period in 1933 where gold went from $20 and instantly overnight straight to $40. Thank you for giving me all of your gold, suckers. And then the central banks had it. They did whatever they wanted to do with the gold price and issuing currency and saving things. And then off they go, off the gold standard. Richard Nixon in 1971 said, we don't need gold standard no more. We can print as much as you want. And the printing press started ramping up, and the gold price caught up to the printing press. And the same thing again in 2010, 2012. We caught back up again to the printing press. And remember where I said the printing press is now? Yeah, you're not talking about 4,000, 5,000, 8,000, 10,000. It's getting up there. But I don't think gold's going to go crazy, guys. Don't think gold's going to 5,000, 6,000, 7,000, 8,000. Let's just say if it goes to $3,000. That's a pretty good achievement from, $1,900 here, especially if you can pick it up on a dip. Okay. Remember, the gold bull of the 1970s through the 80s will help us in the future. Remember our gold season? Gold futures, gold season is always July, August, takes off. My old mate, Larry and I have known each other for nearly 30 years. He died in 2017. And basically, Larry gave us a really good chart. This was Larry's last ever gold cycle chart. Now, I talk about cycles. I've been talking about cycles a bit tonight. Larry's cycle work was the best I've ever known. For 33 years, I've studied cycle work, and Larry is like the master of it. Now, think about this. He was already dead here. Remember, he died in 2017. So there was a period of 2 to 3 months where it went sideways here. And on the first day of the 4th month, 2018, he said it would be the top. And then we'd start going down and we'd bottom out on September, 30th of September, 2018. And there it is. Look, he was dead and he predicted sideways movement for 3 months. And there it is. Look, 4th month, April, bang, down we went. And then look, red square here was Larry's prediction. And I even said to everyone back 2 years ago, don't buy it yet, don't buy it yet, wait for it. I know the season says to buy it here in July, but Larry said don't buy it until September. And if we keep going down on this trend line, we're going to get down to here around September. And lo and behold, that's what happened. We got down to the absolute low, hit my red box, and then broke out of the triangle and began the march upwards, just like we predicted back here off Larry's cycle work. Okay, so my experience of charting, my experience of cycle work, and understanding Larry's cycle, we predicted another move, okay? And the move up, if you look at it carefully, the 30th of the 9th, 2021 is when Larry's cycle work from 2017, before he died, projected into the future. Really important. Now, we also have typical measurements. We knew that Larry's cycle said that we're going up. There was a nice big bottom formation here. We predicted it'd go up to 1750, and it did go up to 1750, and it's kept going. There's an extra month here now where we've just gone up parabolically because of the printing press. We can't see what's going to happen in the future exactly, but we know the cycles don't lie. It came true just as my old mate Larry expected, and our technicals will show us how to get there. Okay, remember the yellow circle. On the 31st of the 12th, 2019, Larry predicted gold would bottom. There it was. We did trade sideways for 3 months, heading into December 31st. And on the 28th of September, boom, 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 boom. And we haven't looked back since. My last time I did the gold class was, I think, about August last year. And I predicted the Australian gold price to break out of this triangle and head upwards into the yellow square that I predicted. Now, if you want to know anything about these triangles, they are a consolidation pattern, and they will project up the length of the consolidation leg. So there is $900 to $1,800. So it's an easy $900. Excellent. Add $900 onto $1,800, and you're going to get what? $2,700. $2,700 is what we wanted. Well, it got there. $2,700. We're at right now, $2,730. So it came true. Everything that I draw in the technicals, it comes true. I mean, you've seen the of this today. Hang this on your walls and print it out. If it comes true in 2019, 2020, you owe me a beer. Yeah, unfortunately, no one's bought me a beer yet. Oh well. But the key was basic fundamentals of the global economy were indicating that another financial crisis was coming September 2019 through to 2020. Not only the time was right, the charts were right. They were all, it was like picking up the calm before the storm. That's what happened. Okay? It happened perfectly as we expected. All right? This is my latest gold in US dollars prediction. You've seen the 3 stages before. They call it the disbelief stage, the green stage. Then the yellow stage is the quick, short little stage. Then we have a big haircut. Okay, come back 50%, and then you get the greed stage where we'll take off and just go absolutely crazy. Okay, and then the end of the market, the bull phase where it was a trap. Then we crash again. We've done this big bottom here over a period of 8 years, and then we've taken off over the last 2 years again. We're at a critical point here in time Fibonacci as well as price Fibonacci. Time and price Fibonacci say something's got to happen this month or next month in gold. It could fall. And if it does fall on my basic charting, I would love to be a buyer of it back in the 1650, 1700. Or wouldn't it be great if we could get it down at 1550, 1600? I don't know exactly where the bottom will be. Based on historical patterns, we will go in 3 stages. Then the final stage will happen in 2021, 2022, and possibly maybe a little bit later into 2023, based on this chart. But Larry's chart said, forget about it. It's going to be 2021 as the high. I'm not so sure. Maybe Larry's right. Maybe I'm right. We'll have to wait and see. We can't project too far out, because just like when you drive a car, you can only see so far in front of you with your high beam on. You know, we can't predict roadblocks and road closures or, you know, storms ahead. You just don't know the road ahead that well, other than what you can see in front of you on high beam. That's the best way to treat technical analysis. Our Aussie gold prediction is for the trend to keep going. We were in a green trend, which is the disbelief stage. We've gone into the gold stage, which is our second stage, the belief stage, okay? And then we'll have the greed stage. We're not in the greed stage yet, okay? Once you hear of your mum and dad and your grandmother and all your hairdressers and all your friends at work and your taxi driver telling you how great an investment gold is, that's when you know we'll be in the greed stage. When that happens, you know when to sell your gold. So just believe me, I'm not going to accurately predict exactly the exact price here tonight where gold will go in Aussie dollar, but it will be much higher than 3,000. That I will guarantee you. Buy gold when you can next afford to do so. Please make sure that you invest wisely with your future money. You're going to need to retire one day, and you're going to need to make sure that you've got some assets behind you to draw down on. I will answer any questions anyone's got. I'll be around on Facebook to answer any messages for the next hour. I will have about a 3-hour sleep before the US Federal Reserve interest rate decision. So if I've got no questions, I will end the class. Let's see if there's any questions. I don't think there is, but you never know. Take care, everyone. If you've got any questions, remember you can ask them here. You can unmute yourself if you want to even. I'll if I unmute all, then I'll have background noise. But yeah, I guess if you want to ask a question, guys, please ask. If you're too shy to ask, that's okay. I'll be hanging around. What would the maximum dip I'd be able to buy? Look, what we know is whatever the price rallies, we can always pull back 50%. Everyone's seen that. You know, if we rally up $100, we can always pull back 50%, or maybe $60. You know, if we rally up $100, we can fall back 50 or 60. Okay, it's just a natural way, natural harmonics, natural harmony of price action. So if we've rallied up from, you know, the 1750, 1800, and we've rallied up to 1950, we could easily come back to that old 1750, 1800. It won't take much. Cup and handle, pattern support, my view. Thanks, Mark. It's really important to just remember, guys, anyone can draw lines and do technical analysis, and you'll eventually think that your technical analysis is right until market price action tells you that you're wrong. So remember, it's a roadmap. It's only a guide. The fundamentals are more than a roadmap. Fundamentals are something different. Tonight I've shared with you some brilliant fundamentals on patterns, the techniques, why gold does what it does, you know, the cycles, and most of all, the printing press, and why. The more dollars that are out there, the more dollars can be purchased to buy those assets. All right. I'd like to know how to get onto the newsletters and perhaps investment opportunities, international clients. Look, have a talk to me, mate, on Facebook. It's more than happy to, you know, talk to you about more. What do you think the Fed will do with rates? How it will affect the dollar? Look, it's rates on holds. They've already introduced $1 trillion, mate, last week into the economy. So it's hands tied. It's an election year, so they won't do anything with the rates now until after the election anyway. So I think it's going to be a sit back and wait. Thanks, James. Much appreciated. Going to follow this and come to Australia next year and buy you that beer. Cheers, buddy. Looking forward to it. Thank you so much, James. Very informative. All right, all good, guys. Yeah, rates on hold 2020 through to 22. Yeah, I don't think they're going to go anywhere. You know, is there a chance that maybe next year Australia goes down and has to lower rates again more? You know, we had the Australian Reserve Bank minutes released last week, and in the minutes he said there is absolutely no chance of the Australian interest rate going into negative. It just won't happen. So I wonder if Japan ever said that before they went to minus. I wonder if the ECB, Europe, said that before they went into negative. You know, I remember Janet Yellen, and I remember Powell saying there's no way we'll go to negative rates for America either. You know, you can't believe what they say. They often do the opposite to what they say. Just like last year, they said there won't be a death tax. Well, get ready. It's coming. I think not in the next 2 or 3 years, but definitely in the next 5. All those baby boomers dying, they'll want to get taxed on all the property. You watch. It'll happen. All right, guys. Take care. And remember, keep in touch. More than happy to help everybody as much as I can when I can. Thank you for your time tonight.